So, what happens when you take a law from the 1940s, a law about, of all things, orange groves, and you try to apply it to a 21st century digital currency? Well, you get one of the most important, most watched legal battles in the entire history of crypto. Today, we are breaking down the Ripple versus SEC case, a showdown that has literally redrawn the map for the whole digital asset industry.
Okay, so here's how we're going to tackle this. We'll kick things off right where it all began with the SEC's bombshell lawsuit. Then we'll get into the real heart of it, the judge's absolutely surprising decision. From there, we'll see how the shockwaves from that verdict hit Congress, and finally, we'll wrap up by looking at what all of this means for Ripple, for XRP, and really for the future of crypto right here in the US.
All right, let's set the scene. It's December 2020. The SEC, which is America's top financial regulator, drops a lawsuit that doesn't just go after one company. No, this one put the entire crypto world on notice.
Now, to really get what this fight is all about, you have to understand the SEC's whole reason for being. It's right there in their mission, to protect investors. And from their perspective, Ripple was breaking a fundamental rule of the financial markets, putting everyday investors at risk.
So here's the absolute core of the argument. The SEC claimed that Ripple wasn't just selling some digital coin. No, they argued Ripple was selling a security. Think of it like a share of stock in a company. And if you're going to sell securities, you have to follow some very, very strict rules. The SEC said Ripple just didn't, and that, they said, was against the law.
And believe me, this was not a quick fight. This legal battle dragged on for nearly 5 years, with some major twists and turns that had the entire crypto industry just glued to their screens, waiting to see what would happen next.
The whole thing, the entire case, really hinged on this one thing, the Howey test. A legal standard from the 1940s, something that was originally about orange groves down in Florida, was now being pulled out to decide the fate of a futuristic digital asset. How the judge would end up applying this old test to brand new technology? Well, that was going to change everything.
And that leads us right to the climax of the case, the judge's decision. Now, this wasn't the simple, clean win-or-lose verdict that everybody was expecting. Oh no, it was something way more interesting, and honestly, way more important. Okay, so check this out, because this is the brilliant distinction the judge made. She basically sliced Ripple's sales into two different buckets. She said when Ripple sold XRP directly to big institutions, hedge funds, that sort of thing, that was a security sale. But when you or I went on a public crypto exchange and bought some XRP, we had no idea who we were buying it from. The judge ruled that was not a security sale. And that one little distinction, it changed the entire game.
And for Ripple's top executives, co-founder Chris Larsen and CEO Brad Garlinghouse, the outcome was even better. The SEC eventually just dropped all the charges against them personally. Their law firm didn't mince words. They called it a complete victory. And the power of that ruling, it became even clearer down the road. Later on, when both Ripple and the SEC tried to settle up and just wipe the whole thing off the books, the judge said, no way. She made it crystal clear that her decision was now part of the public record. It was a precedent that couldn't just be erased because two parties made a private deal. That verdict landed like a thunderclap in Washington, D.C. All of a sudden, this whole gray area around crypto regulation wasn't just some theoretical problem anymore. A federal court had drawn a line in the sand, and lawmakers started to feel the heat to actually do something.
So in response, Congress actually got to work. And in a show of bipartisanship that you just don't see very often, key committees started drafting a brand new law, one specifically designed to create a clear official rulebook for crypto in the United States.
You see, the ruling directly blew up the SEC's public stance, which for years had basically been that most digital assets were securities. But now, the court's decision proved that the old rules just didn't fit, which gave the argument for new laws a whole lot more firepower.
So with their biggest legal threat finally in the rearview mirror, what did Ripple do? They didn't just, get back to business as usual. They took this newfound legal clarity and used it to completely transform their company.
I mean, just look at the numbers. They really tell the whole story. With its legal status in the US finally clear, Ripple saw its active banking partners jump by a whopping 250%. And XRP, which had been delisted by a bunch of US exchanges, was suddenly back everywhere, giving American traders full access again.
In the end, Ripple did settle the last remaining pieces of the case. And while the SEC had originally been gunning for nearly $1 billion, the final penalty Ripple had to pay was $15 million. Now, that's still a steep price, for sure, but it was just a fraction of what it could have been.
Now, freed from that lawsuit, Ripple went on the attack. They spent over $1 billion to buy a prime brokerage firm, which is basically a company that provides all these high-level financial services to big institutions. This move sent a really clear message about their strategy. They were doubling down on the very same institutional market that had been at the center of their lawsuit.
So what does this all mean for the future? Well, with all that legal clarity finally secured and its business absolutely booming, the road ahead for XRP looks a whole lot different than it did just a few years ago.
And then came the real game changer. The SEC actually approved the first XRP ETFs. This was a huge step. It effectively built a bridge between the old-school world of traditional finance and crypto. Suddenly, anyone could invest in XRP right from their normal brokerage account, just like buying a share of Apple or Tesla.
And Ripple didn't stop there. They kept innovating. They launched our own stablecoin. That's a crypto token that's pegged to the US dollar. And then, in a truly landmark move, they even got a conditional bank charter. This allows them to work directly with US banks in a way that almost no other crypto company can touch.
And so, that's where we're left. XRP now has a level of legal clarity here in the US that is, frankly, the envy of the entire crypto world. But the biggest question of all still hangs in the air. Did this epic 5-year legal war create a clear roadmap for every other digital asset to follow, or was this just a unique victory, a special path that was carved out for only one? The answer to that, well, that's going to define the future of digital finance.